evening, everyone. Welcome to Officer 24/7. My name is Niharika Walia Bhatnagar, and I am with you with the specific area of accounting and financial management for bankers. Good evening. I hope I am audible as well as clearly visible, everyone. Let's begin with the session. Please share the session, like the session, and subscribe to our channel. Everyone, chaliye, let's begin with it. Okay. Thank you, Sanjeev sir. Now let's talk about the area of ratio analysis. In terms of ratio analysis, we have different types of ratios. Okay, I hope it's visible now. In terms of ratios, we have different types of ratios, and this is how we define ratio analysis. In terms of the entire types. So what is it about exactly, everyone? This specific topic, or I can say ratios, is basically relationship between two or more numeric numbers, to be very honest. It is just a numeric number which is having a relationship with another numeric number. That is to be covered in this region. So the most important thing is to understand the relationship between two numerics, and those numerics can be defined as current assets, current liabilities, or any specific element of the balance sheet itself. But there is no one point, everyone, to be very honest. There are multiple points which can be added there. Okay? Not one, but many. Acha, what do we include in it? Simple. When we talk about ratios, it is based upon current ratio. Current ratio means the ratio which talks about liquidity, right? Liquidity means if I talk about and tell you, okay, do you have money to give me? And you say, yeah, I can give you money right away. If you're able to give me 10 rupees, 15 rupees, 20,000, 80,000 as soon as I ask you, that means you're going good. That is how we define liquidity ratios. After liquidity ratios, which is based upon liquidity. Liquidity means when we are talking about whether we have the money to give on a certain basis or not. Next point is solvency. See, this talks about you have the money to pay immediately. Solvency ratios. Solvency is defined as something in which we can say ki, Acha, what if everyone, you asked me that, Niharika ma'am, in this case, I'm not asking you for money right away. I said, okay, sir, thank you so much. You said, ma'am, can you pay me the money after 4 years? If I can give you a certainty, ki, sir, even after 4 years, I will be able to give you money. That is called solvency. Hai na? There are multiple areas through which we can define it. Liquidity, solvency, all these are different points given to it. We should be able to pay overall. Don't you think so? Solvency can be said as something in which the organization says that we should be able to give money. That is on not a short-term basis, but actually on the long-term basis. That's how we define this specific area. That is called solvency ratios. Whether you are able to pay on a long-term basis. Then we have profitability ratios. Profitability ratios talks about profits of the organization. Actually, everyone, randomly you ask me, ma'am, do you have money to pay me? I said, yeah, I'm having money. That means, can I talk about the profitability? That is something you cover in terms of profits, whether the business is earning good or not. Then the next part is turnover ratios. Turnover ratios means the ratios which are considering sales. in terms of assets, liabilities, inventories, or whatever the relationship would be. Everywhere. And last is market value ratios. Market value ratios means the ratios where we are talking about the market value of the organization. Matlab, whether they are earning good enough or not, whether they are going good or not, what are they exactly having in this. All those multiple areas of PE ratio is, this is MPS upon EPS, your market price divided by earning per share. Okay, so this is how we define the market value ratios. So overall, there are how many types of ratios? Actually, there are more than this. Miscellaneous are also a type. That is also a type of ratio which exists. So overall, we have multiple types of ratios to understand how the financial statements and their relationship can be studied. Done, everyone? So let's move on towards the practice questions today. Chaliye, let's go ahead and talk about all these ratios in detail through the practice questions. In terms of practice questions, what you can do is you can start with the particular area. All I would ask you for is keep your calcies in your hand so that you are able to do the questions properly, because without the calculator there would be certain calculations which will take a lot of time. So one thing is required, that is a calculator. Chaliye then, everyone. I hope Sanjeev sir all set, everybody else all set. Please join in and let's continue further. Here comes the first question. There are a few questions which I've kept for all theory. There are certain questions which will go as pure practical part as well. So it's gonna be a mix of everything for you. Chaliye then, everyone. Now, let's begin with the first question. Which of the following ratios measures the overall efficiency of the firm in generating profits in the assets? Debt to equity ratio, return to assets ratio, or return on assets ratio. Next one is current ratio or inventory turnover ratio. Which of the following ratios measure the overall efficiency? Overall efficiency means whether the organization is able to work on an overall basis in a good way or they are not going good. This talks about the return on overall basis, not on one part, everyone. So in this case, what's going to be the answer? See, I think debt to equity ratio is a ratio which talks about your solvency, whether you are earning good enough or not. When we talk about the specific area of current ratio, it talks about liquidity. If I ask you today, do you have money to pay me? That is covered under current ratio. That is called liquidity. It doesn't tell anything about anything else overall, right? So in this case, the next point should be inventory turnover ratio. It talks about whether the organization is going good in terms of the organization's view. If I ask everyone, what do you mean by the term inventory turnover ratio? How many times when you are thinking to sell the particular goods in the market, how many times you are producing that thing? That is to be covered in this area altogether. Okay, so there's only one ratio which is left, that is return on assets. How much of profits and losses are we having? ठीक है ना? So in this case, the correct answer is return to assets ratio. Then comes the next question, which says the asset test ratio is also known as. This particular ratio is a part of liquidity ratios. Liquidity means you asked me today that do you have money, and I said yeah, I can pay you right away. That is to be covered here. Correct, Sanjeev sir. You were correct, absolutely. Everyone else, whosoever is joining in, please go ahead and answer. Apologies, everyone. What do you mean by the acid test ratio? Acid test ratio means a specific ratio which talks about quick liquidity. For example, you asked me that, Niharika ma'am, I need money right away. I had given you money now. You give me the money back. That is called, all the current assets are a part of it. But everyone, inventory. Inventory takes years to sell sometimes. So there can be a reason where we are having multiple inventory and we are having a good amount of inventory which we have to take care of. Then comes the era of inventory, and there is one more thing called prepaid expenses. The expenses which we have paid in advance. I cannot ask the person, ki, sir, do you remember I had paid you in advance? Can you give me the money back? I'll give you on time now. It doesn't make sense. If you have paid, you have paid. So these two things are not included in liquid assets. You consider these liquid assets in this asset test ratio. What do you do is liquid assets divided by current liabilities. So in this case, what are they doing, everyone? Correct, Brett sir. In this case, it is quick ratio or debt to equity ratio, asset turnover, or return on investment ratio. It is quick ratio. Quick ratio means if you ask me to pay money right away, can I pay it? I should be able to pay it. That is what we define. Okay? That is what we define in terms of asset test ratio. In this case, what are they doing? Okay, done. So the answer is A, quick ratio. Everybody who has joined in, please share this particular session, like the particular session, and at the same time, if you haven't enrolled in our courses, the particular sale is about to end, everyone. Please make sure before the sale ends, you have taken our course at 81% discount, because 81% is a huge discount which is currently available, and you can use the code Y541 to get it right away. Acha, debt equity ratio indicates what? Solvency, liquidity, profitability, or efficiency. Debt equity. Debt equity can be what? Debt means the money that I've taken from outsiders. One part is my money, one part is the money that I've taken from others. है ना? So in this case, can I say debt equity ratio is something which talks about, if I take a loan, can I pay it back? And I think I should be able to pay it back. Only then I can take the loan. Na? Bank will not give loan to someone who cannot pay it back. Do you know about that? Anybody will give you money only if he feels that he or she can get the money back from you. If they cannot get the money back from you, they will never give you money. So in this case, liquidity ratio is basically a ratio which talks about, debt to equity ratio is a ratio which talks about solvency. That too long term or short term, everyone? Everybody who's there in the class, long term or short term? Sanjeev sir, Brit sir, everybody else who has joined in? In this case, the correct answer is solvency. Solvency is actually long term, correct, Sanjeev sir? It is long term, not short term, not medium term. There's nothing of that sort. It takes years for that. The answer is solvency of a company. Inventory turnover ratio is calculated as cost of goods sold divided by average inventory, sales divided by total assets, net profits divided by total assets, sales or average accounts receivable. Inventory turnover ratio is one of the activity ratios which talks about the organization's money. Pata. It says whether the organization is strong enough or not. Inventory turnover ratio talks about how many times you convert your inventory to from raw material to finished goods. So inventory turnover ratio talks about only one basic thing, in how much time we convert our raw material into finished goods and how many times. For example, everyone, okay, if I make glass bottles, है ना? So if I'm making glass bottles, this particular thing will not take more than a day. I think days also, I think I'm exaggerating. This particular bottle can be made within no time, isn't it? Matlab, maybe if we are making it through If you're making it through the machines or assembly line basis, it will take hardly an hour to complete the entire bottle with the particular cap and checking the specific brand name, etc., that is put in this, right? So if I'm putting all these things, it will be done in a very little time. Raw material to finished goods and then sale. So this is for FMCG, it is very small time period. Turnover term means sales. So the relationship between sales and inventory is to be covered here. So in this case, the correct answer is, if the sales is not given, then the cost. Cost divided by average inventory. Then everyone, the answer is A. That is cost of goods sold divided by average inventory. Acha, next point is DuPont analysis. Among the ratio analysis, now ratios is basically one of the areas of organization which talks about, correct Sanjeev sir? Brett sir, very good. In this case, when we talk about ratios, now ratios tells you to do the post-mortem of the balance sheet. Post-mortem means look at the balance sheet, look at the things which are they are doing. The DuPont analysis decomposes the return on equity into which the following components. Um, oh, asset margin, profit margin, asset turnover, as well as financial leverage. Gross profit margin, net profit margin, operating margin, liquidity ratio, solvency, efficiency. Then inventory turnover, debt equity, or current ratio. DuPont talks about only three things overall. मतलब ना return on equities, in how much time I can get the returns back to from where I started. If I put money into the business, that is equity. If I put money into the business, and what do I get in return? That is return on equity. So in this case, we have the profit margin, we have the asset turnover, as well as the financial leverage in it. These three things combine together and make A. Achha. Next question, everyone. The times interest earned ratio measures the times interest earned. Achha, everyone, if I take a loan from you, you said that, ma'am, I can give you a loan of 10 lakhs based upon your business. Meka, why based upon my business? You said, ma'am, do you know the interest amount would be around 80,000 per month, per annum, sorry. Let's take it that way. So I said, yeah, I earn good enough. You said, nahi, you earn 8 lakh rupees only. You will pay interest, then your principal is still left. You have your own personal expenses as well. I don't think you can pay. Wahi, if I take, if the interest, in this case, the feasibility is definitely difficult because it's basically life of a salaried person. Let's take it on the business. Business wanted to take a 10 lakh rupee loan and they said 1 lakh rupees per annum is something that they have to pay. They would be like, fine, our organization makes 35 to 37 lakhs per annum. I don't think we have a problem there. So this particular amount is not a problem. It can be a problem for the people who are earning less, but the one who are earning more, even after the payment of the principal, they will, after the payment of interest, they have ample of money to pay for the principal. The times interest earned ratio is the number of times interest is earned before taxes and interest expense are deducted, the efficiency of the company in managing its inventory, the ratios of current assets to current liabilities, or overall profitability of the company. In this case, what's going to be the answer? This is the number of times this is actually earning before interest and tax. If you haven't paid any interest, if you haven't paid the tax yet, what amount of money do you possess? Higher EBIT upon I. This is the formula. This is formula for interest coverage ratios. In this case, what are we studying? This is EBIT upon I. How many times we are able to cover our interest based upon our profit that we are earning. Higher the ratio, better it is. That means I have the capacity to pay off any kind of loans, any kind of payments can be made. A company's liquid assets are of 5 lakh rupees and its current liabilities are of 3 lakh. Thereafter, it paid 1 lakh rupees as its trade payable. Quick ratio will be. Okay, everyone, the company's liquid assets were of 5 lakh rupees. Current liabilities are of 3 lakh rupees. And then you divide it. Liquid assets upon current liabilities normally gives you the quick ratio. But there's a point in this. The question says, there it paid 1 lakh rupees. If you paid 1 lakh, you lost cash. 1 lakh. At the same time, if you paid this particular amount, your liability is also going down by rupees 1 lakh. That means your liquid assets are of rupees 4 lakh divided by 2 lakh. In this case, the answer is 2:1. Done, everyone? Tried the question yet? So just a moment. Deep part should be visible to you now. Anji? Everyone? Got the idea? Formula for liquid assets? Easy and interesting question for sure. Sanjeev sir, Brad sir, everybody else who has joined in? This is ratios. Done, everyone? Chaliye ji. Now let's move on to the next question. The answer is D. Acha, here comes the next question. Equity is given, capital is given, reserves is given, debentures are given, current liabilities are given, and debt equity ratio is given. Everyone? Now comes equity, debt, as well as current liabilities are given. What's going to be the answer according to you? Acha, let's try. Yeah? The formula is debt divided by equity. What do you mean by this? Debt is only the long-term debt divided by the money that we are putting in. Long-term debt is 10 lakh. Share capital is 20 lakh plus 5 lakh. 25 lakh. 10 lakh divided by 25 lakh. Why is it so? Debt means only the long-term debt and equity means your share capital plus your reserves and surplus minus any fictitious assets. This is how we define the term equity, everyone. So in this case, it's 10 divided by 25. What's going to be the answer, everyone? calculated it. 0.4 is to 1. Then we have 0.32 is to 1, 0.72 is to 1, or 5 is to 1. The 0.5 is to 1. Done, everyone? Now let's look at the next pointer. The correct answer is 0.4 is to 1. Correct, sir. The answer is 0.4 is to 1. Next question. Current assets are given, current liabilities are given, revenue from operations is given, and they are asking working capital turnover ratio. WCTR, working capital turnover ratio, means we find the working capital, that is CA minus CL. Current assets are of 5 lakh minus current liabilities are of 1 lakh rupees 4 lakh. This is working capital. Then what do we do in terms of working capital turnover ratio? We take the sales and we divide it by the working capital. So in this case, what's going to be the answer? Your revenue is of 28 lakhs divided by 4 lakhs. What's going to be the answer? Take a moment, everyone, and solve these questions very carefully. In this case, current assets are important, current liabilities are important. I'm sorry, as well as the revenue from operations are equally important. Please solve these questions as well with me. It is important that we try these questions. Chaliye ji. The answer is 7 times. Next question. Correct, Aniket sir? Got the idea now? The fixed asset turnover ratio measures what? Fixed asset turnover ratio is a relationship between turnover and fixed assets, the efficiency of a company in generating sales from the fixed assets, or it is basically the company's ability to meet the long-term debt obligations, then the proportion of net income to total assets or liquidity position of the company. The fixed asset turnover ratio is a ratio which talks about how many fixed assets are required in terms of getting the specific area of our sales. Or if I'm getting good sales, then is it because of the fixed assets? Indeed, sometimes it is. For example, in the production area, more fixed assets you process, the more fixed assets you keep, the better is your working. So fixed asset turnover ratio talks about the efficiency of a company in generating sales, a company to meet the long-term obligations. Nahi. The proportion of net income to total assets. Total assets. Total includes current and non-current both. Huh? The equity position. So in this case, the correct answer is actually A. The efficiency of a company in generating sales from its fixed assets. The sustainable growth rate of a company is primarily influenced by net profit margin, return on assets, dividend payout ratio, or asset turnover ratio. The sustainable growth rate means the rate which is existing every single time. Net profit margin, or net profit is NP, ultimate profit that we receive. Return on assets, how much time we are able to get returns. Then we have dividend payout ratio. Dividend payout ratio can be the ratio which talks about whether this is market test ratio, pata hai? Whether the organization can pay off the debts or not. Sorry, can pay a good amount of dividend or not. Dividend is return on your income. If you generate income and you are able to pay back, it's good. If you generate good income and you give the money to the equity shareholders are going to be extremely happy. Ki, Arey, the organization is giving us a dividend. And then comes asset turnover ratio. Asset turnover ratio means the ratio which is relationship between sales and assets. The correct answer is return on assets. Done. Next question. The PE ratio. Again, everyone, we have talked about it at the very beginning. If you were there in the first 1 minute or 2 minutes, I think we have discussed this part. What's going to be the answer? The price earning ratio, PE. P is price, E is earnings. PE ratio is basically market price divided by earning per share, total assets upon total liabilities. This is absolutely wrong. Net income divided by total equity. Nahi. This is also another point. Dividend per share and market price. DPS upon MPS talks about the dividend payout ratio. Sorry. Dividend payout ratio is DPS upon EPS. Matlab, how much part of earnings are you paying is dividend payout ratio. When you compare your MPS with EPS is the answer. The answer is A. Very good, Aniket sir, as well as Sanjeev sir, as well as Sujoy sir. A is the answer. Opening inventory is given, everyone. Closing inventory is given. Purchases, carriage, wages, everything is given. Quickly, try it out. Find the inventory turnover ratio. Under inventory turnover ratio, what do we do? COGS upon average stock. COGS. Opening stock plus purchase plus direct expenses minus closing stock. Everyone, what's going to be the answer? This is COGS divided by average stock. Chaliye, let's look at it. Inventory is 1 lakh. Opening. Closing is 1.5 lakh. Plus purchases are 6 lakhs. Plus 25,000. Plus 2 lakh. Minus 1.5 lakh. This will give us the cost of goods sold. Okay, once you find the cost of goods sold is 1 lakh opening. Okay. Then we have purchases plus 25,000 plus 2 lakh of wages. We do not include salaries in it, everyone. Salaries is not a part of it, but wages are, because we give it to the labor workers. 1 lakh plus 1,50,000, that gives a total of 2,50,000. This is 3.1:1. This should be the answer. The question is different. Inventory turnover ratio is this only. The answer should be 6 lakh plus 1 lakh, making it 725 minus 1,50,000. Oh, I'm sorry. It has to be 5,75,000 divided by 2,50,000. Arre. Acha, ठीक है. Wages are okay. One mistake. I think I've made a mistake here. Keep your carriage as 2,50,000 there. Opening stock is 1 lakh. Purchases 6 lakhs. Plus wages 2 lakhs. Plus carriage inwards 2,50,000 minus 1,50,000, giving us 10 lakhs divided by 1 lakh plus 1,50,000 divided by 2. Oh, this is 1,25,000. Oh, I'm making a mistake. I've got my mistake. I had to divide this by 2. All the calculation mistakes. I was thinking I don't forget the wrong answer. I got wrong answer there. Everyone, the particular average stock is what? The average stock is 1,25,000. Taking it in the same manner, the question isn't wrong. My calculation was wrong. It was 1,25,000. On the upper side we have 1 lakh plus 6 lakhs plus 25 plus 2 lakh minus 1,50,000. This gives me 7,75,000 divided by 1,25,000. This gives me 6.2 times. Now I'm getting the answer. Done, everyone? The mistake was I was taking the total stock, and this is a very normal problem that people face, that sometimes you just write it that way. In actual, this is basically what? This is how we can define it in terms of the working altogether. Done? Yes, so Joy sir, the answer is D. That is 6.2 times. But these kind of questions are basically testing your brain only. They're just putting you into a psychological situation. Probably the particular definition is very difficult. It's very difficult to do these kind of questions. X, Y, Z thing starts coming into your mind and you feel probably now I'm not going good in the questions. And then when you start doing the question, when you find your mistake, you're like, oh, now I know. In ratios, the most important thing is the formulas. If you know the formula, these things are just very minute. Okay, everyone, another question of similar nature. Another numerical question. Revenue from operations is 2 lakh. RFO is 2 lakhs. And inventory turnover ratio is 5 times. GP is 25%. Find out the value of the closing inventory. This is my cost of goods sold, everyone. And ITR is also given. Can we find the average stock? It isn't that difficult. But what you need to do is just try the formula. ITR is equal to COGS divided by average stock. Okay. The question says if the closing is 8,000 more than the opening. So in this case, your opening and closing. Opening, closing. Opening be X and closing is X plus 8,000. That makes the average of these two. 2X plus 8,000 divided by 2. Taking 2 as common, X plus 4,000 divided by 2. So this is our average stock. Our ITR is 5 times. Our COGS is 1,50,000 divided by X plus 4,000. So by just displacing it, you can get the answer. The answer can be 5x plus 20 is equal to 1,50,000. Gives us 1,30,000 because this 20 is a plus. It goes there on the negative side divided by 5. It comes out to be 26,000. These kind of questions aren't tricky, everyone. Telling you again, these questions require only and only one thing: patience. Acha, now I think it would be visible to you. Oopsie, I'm sorry. Visible clearly? Sanjeev sir, Sujoy sir, Aniket sir, everybody else was there in the class. Correct. 1,30,000 divided by 5, giving us an answer of 26k. The questions we are dealing with are a few questions which are really good and a few questions which are basically testing your patience as well. Because in this case, we are talking about multiple concepts of accounting. चलिए. So, acha, isme what were we supposed to find? We found the opening stock of 26,000 na. And there's one more trick. Our opening stock was X, which was 26k. Add 8k more, giving us 34 for closing. This can be converted into a case study where they can put you through the situation that what is the value of opening stock, what is the value of closing stock, and see they are giving both the points in the question itself. Done. चलिए जी. Let's try one last question. Last question for the day, everyone. A firm's credit revenue from the operations is 3,60,000. Cash revenue from operations is 70. Cost of revenue from operations is 3,60,000. What is the GP? Everyone, credit revenue means your credit sales and your cash sales. Both are given. 3 lakh 60 plus 70. This is my total sales. Adding up both, everyone, 3 lakh 60 plus 70. 4 lakh 30, this is my total sales. Now let's look at the revenue, cost. My cost is 361 200. From 4 lakh 30,000, remove 361 200. You get the profit. The profit is 68,800. If this comes out to be a profit, then GP divided by revenue from operations. In normal case, GP is on sales only. In the question, if they specified it has to be on cost, then only you do that. This is 68,800 divided by 4,30,000. This is 16%. Done. These are seriously very good questions. It tests your brain, it tests your ability to answer even. Ki pata nahi whether I'm going good or not. And one of the best things I can tell you is to be very free when you're doing these questions. I don't know. Matlab, I think in my case, I've done so much of these questions now. Huge quantity. I think during my plus one, plus two only, I think I would have done more than 100 questions of ratios, that too full-fledged. Multiple ratios to calculate in one question. So that's why when I'm doing these questions, I'm not scared. Even if you all are watching and everything else is going on. The fact is, even if I make mistake, I need to figure out where I'm going wrong. If I know and I can figure out where I'm going wrong, in the examination, I'll never be wrong. Simple reason, if you find your mistake before the examination, you clear the exam. If you find the particular point after you have cleared, after you have gone for the examination, it's just not worth it. In English now, there's a specific area that is called, there's a quote which says, failing to plan is planning to fail. When you are doing these questions, everybody who's there in this particular class, when you're doing these kind of questions, it doesn't matter where you go wrong. The point is, can you find out where you went wrong? Because the more you can find your mistakes and correct them right away, you will never have a problem. That's why little things makes major differences. Acha everyone, let's end this session here. If this session was valuable, please don't forget to like it. Your liking the particular videos, sharing it among your peers boosts our motivation. Matlab, it boosts me a lot. Ki nahi, I think people are looking at the videos. My hard work is paying off. That particular appreciation, being a human, is definitely there. Right, so that is what I can tell you. Whenever we are going for the classes now, your appreciation, your recognition plays a very, very important role. So please share the session, like the session, and don't forget to subscribe the channel if you haven't done it yet. Okay, and at the same time, everyone, if you have taken up our courses, it's good, but if you haven't, I hope you know there are so many courses that we have added for you. All you need to do is just check out our website, right? So in this case, what you need to do is go on to the area of JIB May 2024. Look at this JIB Mahapack. Currently, this is available at 80% discount. It is ending soon, everyone. I am telling you in advance. Before this ends, please go ahead and take up the courses right away, because you are getting the course at the lowest price at this point of time. 81% discount is currently on the website, everyone. 80%. So this means if I am having 2,995 minus 81%, because you can use our app there. By downloading the app, you will get the particular details of the specific class as well. In this case, it will cost you 5,700, 5699.05. That means you can get this specific course for less than 6,000 rupees. You're not even paying 500 per month and you're getting it for an entire year. But this offer is ending soon, everyone. But before it ends, I would say, if you're planning, then do not wait at all. If this session was helpful and you are able to connect with me, you are able to go good in terms of the classes, in terms of the questions that we are discussing, then go ahead and use the code Wi-Fi41 and get the Mahapack. In Mahapack, you are getting regular classes, comprehensive batches. Mahapack includes our test series, ebooks, even the mini marathons and marathons, Mahamarathons, and this also includes our numerical excellence batch, which was started recently. So there are so many things that are available for you. Don't forget to subscribe to our channel. Don't forget to take up the courses right away, because every minute taking away is an opportunity lost. So don't lose the opportunity, everyone. Get the particular courses at the lowest price right away. Okay. Thank you so much for being there, everyone. God bless you, and I hope it was a valuable session for you. If it was, then please share it and like it. Thank you. Have a nice day. Bye.